Hello and welcome to this special webinar on rollover for the November series. I am Devarsh Vakil. I head the PCG advisory, and with me we have Nandish Shah. Hello Nandish.
Hello friends. Thanks for joining this webinar on role analysis for the November series.
Let us start. So we have seen that in last three series, November, October and September, we have been bullish on the markets and we have asked investors to remain bullish. Nifty had fallen for the three consecutive series in the September, October, and before 3 months before September. And at the end of the series, August series, we asked investors that this has happened only in the more than 3 times a row, only happened in 2002. So we turned bullish, aggressively bullish, and we expected positive September series. After the September series, when we did the review for the October, we sent out a message that continue to remain optimistic for the October, and at the end of the October we again ask investors to remain bullish for the November. Let us review what has happened. So Nifty and Bank Nifty has consecutively gained for three series. Nifty has gained 11%, while Bank Nifty has gained 18% in last three series. What has happened in November now? Nandish, can you please review what has happened in November series?
Yeah. So after a highly volatile October series, November series started on a positive note, but it remained in the narrow range of 200 points for the most part of the series. However, during the last week of the November series, it has broken out of the range and finally closed at all-time high level and with the gain of 2.3%. However, if you look at Bank Nifty, Bank Nifty continued its upward journey from the very first day of the November series, and it remained and continued throughout the series to close with the whopping gain of 6.7%. And during the last three series together, Bank Nifty has gained by 18%. So last three series were very good for the Nifty and Bank Nifty.
Right. So Nifty and Bank Nifty has done wonderfully well, and as we have expected, they have done quite well. So what about overall review of the November? What are the indicators suggesting?
So we are starting the December series with overall open interest of 2.7 crore as against 2.7 lakh crore as against 2.5 lakh crore at which we had begun the November series. Now the important data to watch out is the stock futures open interest. We are beginning the December series with stock futures open interest of 403 crore as against 375 crore shares at which we began November series. So though the stock futures open interest is 7% higher than last series, we believe that this is not a matter of concern, as this open interest of 403 crore is still 23% lower than the all-time high open interest that we have seen in February 2018. And this open interest, this 23% lower open interest is despite the market is at a new all-time high. This in turn indicates that this higher open interest at the beginning of the December series is not at all alarming, and one should remain bullish only.
Right. Basically, markets have risen. There is a build-up in open interest, but it is not alarming. We are far below the February 2009 all-time high since levels we have seen.
Now, if we move to Nifty futures open interest, we are beginning the December series with lower open interest of 1.47 crore shares. This open interest in Nifty future is at 53-month low. So you must be surprised to see that we are beginning the December series with Nifty open interest of 1.47 crore shares, which is lowest since June 2015. This in turn indicates that market participants are not confident to build positions at such higher levels. Now, if I move to the Bank Nifty, contrary to Nifty, in Bank Nifty the open interest at the beginning of the December series is at 8 series high. This indicates that people are becoming more confident in Bank Nifty than Nifty.
Okay. So basically, for the last three series, Bank Nifty has gained tremendously. Earlier, we were bullish on Bank Nifty. Open interest was low. Bank Nifty has performed well, but now the general participants are beginning to be bullish on Bank Nifty, and they have built up positions there. What about important levels for November series? November, where are the options have been written?
From the options side, if we see, we have seen call writing at 12,500 calls in the Nifty, which in turn indicates that on the higher side 12,500 is the level which might act as a strong resistance. On the lower side, I think 11,900 to 12,000 will act as a support where we have seen aggressive put writing.
Okay. So basically, the range for the series is right now 12,500 at the higher side, between 11,800 to 12,000 at the lower side. So this is the range of the Nifty we are expecting for the month. What about important sectors, Nandish?
Friends, you must remember in the last webinar we had mentioned that apart from banking and finance, pharma is a sector you should watch out for the November series. And actually, our view has vindicated as Nifty Pharma Index and stocks has done very well, where Nifty Pharma Index has risen by 5%.
Right. So apart from the pharmaceuticals, which we were bullish and has done well, what are the other sectors we should watch out for?
Now for the December series, you should watch out the sectors like banking and finance, cement, construction infra, pharma, and telecom. Now, in the banking and finance sector, we have seen long rollover in the PSU bank. So during this last three series, our focus was on private sector banks. Now, I think one should focus on PSU banks, and they are likely to outperform along with pharma sector.
Right. So basically, PSU banks, they have low weightage in Bank Nifty, but that is where the action is likely to move from the private sector banks. And apart from PSU banks, we continue to remain bullish on pharmaceuticals, and cement, construction, and telecom are three more sectors one should watch out for. Is there any important stocks which you would like to focus for the month of next month?
Friends, there are many stocks in which we have seen long roller to a December series. However, among those stocks, our focus should be on Max Financial, Century Textile, IGL, MGL, and Bharat Forge. These five stocks one should look out for the December series, and they are likely to do well.
Right. So basically, we are seeing long rollover in these five stocks. It is expected that there could be a lot of positiveness about these stocks. So keep these five stocks on the radar for the next month. Similarly, we are seeing that some stocks are attracting a lot of open interest. We have studied open interest since January 2018, and as you can see on the screen, MFSL, Container Corporation, Gas Authority of India, Grasim, Sun Pharma, and Axis Bank. This is where the lot of action is going to happen this month. So watch out for these six stocks. If there is any positive or negative news development, do participate. The movement is likely to accentuate, and they are likely to be really volatile in these months. So keep an eye on these six stocks for the next month. Similarly, combine all this and sum it up. What are the important levels, and is there any message you would like to pass on to our viewers, Nandish?
Just to sum up, as we said earlier, lower stock future open interest as compared to all-time high open interest that we have seen in February 2018. First sign of long build-up by the FIs in the index future segment, and lower Nifty futures open interest. These all indicators indicate that downside in the market is limited. However, as we have already seen 11% rise in the last three series together in the Nifty, our advice would be to buy on Nifty only on declines. Until then, your focus should be on the selective stocks, stocks from the pharma and PSU banks, where I think money is to be made for the traders.
Right. So highest open interest is around 12,000 levels right now, and below that 11,800 is the important level. So 11,800 to 12,000 should be the range in which one should accumulate long position with the 11,700 stop loss. And as Nandish pointed out, apart from the index, important stocks to focus would be the mid cap, FNO mid cap. That's where the action is likely to be. So that is for the Nifty. Can we share the similar levels for Bank Nifty also?
Yes, in the Bank Nifty, we are starting the series with the higher open interest as compared to previous series. So we believe that till now the Bank Nifty has outperformed, but now the time has come for Nifty to outperform. So if somebody is long in Nifty, our advice would be to book profit at this level and buy only on decline if it comes to in the range of 31,500 to 31,800. And on the higher side, the resistance seems around 32,200. So just to conclude, our advice would in the Bank Nifty would be to buy only on decline, not at this level. We believe that it has outperformed the Nifty during the last three series, but now time has come that Nifty is going to outperform the Bank Nifty.
So basically, Bank Nifty has become relatively heavy open interest is at 8 months, so it is likely to consolidate, it is likely to come down. So basically book profits. If you had watched our webinars, previous webinar, we had been bullish. We have seen that the open interest was very low, and there is likely to be outperforming in the last series. That has already happened. It has given good returns. Last 3 months, Bank Nifty has given almost 18% returns. So now we are basically cautious on Bank Nifty. We are cautious on Nifty around 12,000 level, and focus should be on the mid cap and small cap stocks. That is our message of this webinar. 12,000 to 11,800 buy on declines, and 31,500 to 31,800 on those declines you create long positions. And also focus on PSU banks, cement and construction, telecom and pharmaceutical sectors. So I hope this few stocks in the sectors we have suggested, you will keep them on radar and profit from this opportunity in the next series. Thank you all for joining, and have a nice weekend.
Thank you friends for joining this webinar.